Welcome back. I'm Pratap here. Today is 20th November 2023, and there is one important announcement before we start our session. I'm on travel for the next 2 days, and I'm not in a position to record the videos for generating the reports. What I do, I will generate some quick reports to find the stocks near demand and supply zones for daily time frame, 75 minutes time frame and 15 minutes time frame, and I will post them in our Telegram channel. In case if you are not registered in our Telegram channel, the link is available in the description. So please go and register. So whenever I post in the Telegram channel, probably you will get the notification. I will be providing the NeoStock Telegram channel in this YouTube video. Please look into the video description. So I will be available again from Thursday. If not Thursday, from Friday onwards. Again, I will be posting the video recorded sessions, including the analysis and generating the demand and supply zones based on bullish setup and as well as the bearish setup. So now let's move on to our session. Before generating the demand and supply zones, let us quickly evaluate the performance of high liquidity zones posted on Friday, and also we will evaluate few stocks posted on Thursday also. So the first one is Asian Paints. So we have a high liquidity demand zone, and today prices entered into this demand zone. So I have already fine-tuned at the 75 minutes time frame. Look into the 75 minutes time frame. We have a ERC candle. We have a ERC candle. It is looking like a base candle, but it is a ERC candle, failed ERC candle. We can use it as a leg in, and then we have 4 base candles, and then we have a leg out as a rally. And look into the structure of this particular demand zone. Yesterday only in the practical session, the 4th and final practical session in our training, we discussed the strength of the zone. The strength of the zone is always determined based on the leg out candle. So what is the strength of this zone? What it is telling? It is looking like a sluggish. The structure of the zone is, this leg out is a sluggish, a leg out with sluggish. The price is moved within this leg out area. Do you accept trades of such kind of zones? Mostly we don't. But even then, this is a high liquidity zone. But there are chances that high liquidity zones also will fail. There are other fundamental concepts we should not forget when we are trading with the zones. So even then, it is a sluggish. Because it is a high liquidity zone, it has given some return today during the intraday. So look into this 75 minutes. The risk is high. So what we did, we fine-tuned to 5 minutes level within the 75 minutes zone. So if I open the 5 minutes chart, here we have a drop candle, and then you have few base candles, 1, 2, 3, 4, 4 base candle, 5 base candles, and then we have a leg out with gap. And today what happened? Prices entered into this demand zone. And the target always we look into 15 minutes. Most of the times we look for our targets at the 15 minutes time frame. So let me change the 15 minutes time frame. So here we have a drop, base and drop. So we have a supply zone, 15 minute supply zone. Today prices entered into that 15 minute supply zone. So at 12 o'clock, 15 minutes candle, it reached the 5 minutes demand zone, and then after that again within the same 15 minutes it reached the 15 minute supply zone. But the margin level is very small. We have a very good risk reward. There is no doubt in that. but margin is not at our expected level. So that's why today Asian Paints gave only 3,290 rupees profit. So the return on the investment is 2.947%, close to 3%. But generally we don't take trade on this because of the sluggish nature in the prices on this 75 minutes candle. But the reason why I'm talking, because it is a high liquidity zone, even though the structure of the zone is not good as per the leg out structure, still the high liquidity demand zone has given some intraday profit, around 3% return on the investment. Okay, so this is about Asian Paints. The next one, we got a very good profit. It's a clean and neat trade. So this is from our Friday's list. So this is the high liquidity supply zone. So we have a drop base drop. This is the daily supply zone. So when this leg out is created in December 21, almost 2 years back this zone was created. It is a fresh zone. Because it is a 2 years back zone, the trading view, the data is not available for 5 minutes to fine tune at the 5 minutes. But 15 minutes the data is available. Generally, the 5 minutes data is available only for last 1 year in trading view. That too if you subscribe to the premium package. The basic level package, they give only 6 months data for 5 minutes. And 3 years data is available for me for 15 minutes. So I have fine tuned to the 15 minutes level. I can able to fine tune at the 15 minutes level. So it reached the 15 minutes level. But even before that, first what is the rule? We have to fine tune to 75 minutes time frame. Inside the 75 minutes, we have to fine tune to 15 minutes time frame. In the 75 minutes, we have a ERC candle, expanded range candle, and then we have 4 base candles, and then we have a drop candle, and then I fine tune that to 15 minutes level. This within this 75 minutes again, I fine tune to 15 minutes level to minimize the risk. I would have fine tuned, definitely I would have fine tuned to 5 minutes, but charting data did not help me. Otherwise, we would have got even more profit. Probably somewhere a deep entry inside this we would have got. We would have got even much better profit. But anyway, whatever the profit we got within the 15 minutes itself is a very good profit. So we have a 15 minutes demand zone. And prices entered into this 15 minutes zone. So around 11:30, it reached the target. And the profit is 11,081 rupees, which is 9.07% return on the investment. This is Apollo Hospitals. And next one is another successful trade, Burger Paints. Remember, previously, once we discussed about this trade, that is on 9th November. It was an aggressive trade. Earlier, it was an aggressive trade. Why it was aggressive? Because the 75 minutes zone is a little overlapped with daily zone. First, let me open the daily. So we have a drop base drop. This is the daily supply zone. Inside this daily supply zone, we have fine tuned to 75 minutes zone. Again, we have a drop, base, drop, this 75 minutes. Within that 75 minutes, we have fine-tuned to 5 minutes level. So here we have drop, 2 base candles, and again a drop. This is the 5 minutes. But this 5 minutes area came a little below this daily supply zone. And this, whatever we fine tuned, that 5 minutes level, which is acting as an entry buffer. Because we know most of the times institutions maintains entry buffers. I have explained the entry buffer concept in detail in one of the videos earlier. In case if any of you did not listen that video, that is available under NeoApp's terminology playlist in our homepage. Go to NeoStock YouTube homepage and scroll down. There you can find a playlist NeoStock terminology. So in that playlist you can find that video. I have given a detailed explanation about entry buffer concept. Actually, we have identified that concept based on NeoStock software. I gave the complete explanation. Please go through that video. So I don't want to waste your time again by explaining. So this is acting as an entry buffer. But first time when there is an entry buffer, we don't get the trade. Why we don't get the trade? First time it will give the confirmation. That's why last time when prices entered into this entry buffer, we didn't take the trade. We just confirmed this as an aggressive trade, but we didn't have any price action clues also earlier. But this time when prices entered into this, it is confirmed. There is an entry buffer. And also we got a clue, price action clue. What is that? We got a huge rejections from this area. See again, last Friday what happened? Last Friday actually we missed it because it was not in our list, monitor list. Before last Friday, the prices were not near to the zone. They were a little far below this zone prices. But the last Friday's price actions gave us some clues again. See, there are a lot of prices are entering, rejections, entering, rejections. The prices are entering, rejections. So it is a strong confirmation for there is an entry buffer. Now we have confirmed it is an entry buffer, and also we got a price action clues in the form of rejections. And today, the moment prices entered into this, you have to take the trade. You should not miss it. And the risk is also very minimal here. Because we have fine-tuned to 5 minutes zone. The risk is very minimal. And look into the target. Let us get into the 15 minutes area. I'm sorry, this is blue color line is moved to just now, sometime before. Actually, we kept the target here. The reason is there is a gap. When there is a gap, it is like a black, it is a gray area. We can say gaps are like black holes. Black holes never gives you a clue to tell you what is there inside. That's why most of the time, whenever there is a gap, just before the gap, we will exit our trade. So that way, we have got Burger Paints gave 13,200 rupees profit, which is 9.59% return on the investment. ₹13,200 profit, which is 9.59% return on the investment. Excellent profit. And the next one is JSW Steel. We didn't get the entry today. Last minute prices entered into the zone, but still they didn't get into the fine-tuned area. But still I have a lot of doubts about this trade, whether to accept or not. Before that I tell you what kind of trade it is. This is not a daily trade. This is a 75 minutes high liquidity zone. This zone is not from daily high liquidity zone. This is from 75 minutes time frame high liquidity zone. So we have a rally, we have base, and again we have a rally candle. This is 75 minutes zone. This is a 75 minutes zone. So what I did, because the risk is very high, so I went to the 5 minutes time frame. Sorry, not 5 minutes, 15 minutes time frame. So we have a rally candle, 4 base candles, and again a rally candle. And we have follow through candle is also there. Strength is good, the zone strength. But the problem is, see again price entered into this zone after that. So that means this zone is already tested, the fine-tuned zone. And moreover, it is more deep inside. After that, there are no fresh zones created here. That's why I have some doubts about this trade. If you ask me what I do in such kind of situation, I don't accept the trade. I look for some other stock. Anyway, we have to watch what is going to happen. But we don't take the trade. The reason is it is already tested. See, after testing the move, how big the price is. You may ask a question, is it going to fail? I may not be in a position to tell whether it is going to fail. We don't know how strong this zone is going to be. Maybe it may give you one more trade, or easily tomorrow or day after tomorrow, it will easily break this zone. That is also possible. When we have doubts, there are no other price action clues here. But one thing we can tell, the only clue we have, the rejection we got from this zone. And moreover, this is a high liquidity zone at lower time frame level, that is at 75 minutes level, not at daily level. And 75 minutes level high liquidity zones, they may not give us much clues like the clues we are getting in a daily time frame. Why we defined an accurate strategy for daily zones? Because inside the daily zones, every time 75 minutes fresh zones we are able to get. But when the time frames are going further down, and if you are taking them a high liquidity zone, fine tuning is very, very difficult. Even look into the 5 minutes time frame, the structure is not good. That is another reason why I didn't have a comfort here. The structure, 5 minute structure, look into this. There is no good price movement. See, a lot of consolidation took place here. The prices are not in a proper way at 5 minutes level. We have seen previously, when we have such kind of structure at 5 minutes level, most of the times those zones are failed. But one possibility is there now. We have a drop candle, again we have a base candle, and we have again a leg in, the rally candle with gap. This is there. Moreover, this is like a newly created zone. That way you can consider. If you consider the 15-minute zone, which is already tested, but institutions created one more. This is what I observed here. This is 5 minutes level. But this zone already prices entered today at the last minute of our trading session. Let me show you here. Already price just entered into this. After that, there are rejections from this. Now let me show you the recent data, you will understand. See here, from this zone, there are a lot of rejections or prices are moving. So we can accept this zone, that is possible. But still, how much risk we can take here is the question mark. So that is the reason why JSW is still, I am not in a position to take a decision. But this 5-minute structure is good. We have a drop, we have a base, and then we have a rally. And today prices just entered into this zone. That too in the last trading hour. But we didn't have a big move from here. That is one concern I had. Generally what happened once prices entered into this, so there should be some big push. Maybe there is no big push, maybe we may think like this today, the supply is very strong, maybe that could be one reason. Once already price entered into the zone, it is quite risky for us to take the trades. The prices are closed inside the zone. Always we look for stocks near this zone, not prices entered inside the zone. I'm not saying that doesn't work. Who knows, tomorrow price may go a little and then there could be a big push. That is also possible. But I am trying to minimize as many possible risks. Because our algorithm, stocks near demand and supply zones, why it is working? Because our algorithm is calculating based on the volatility on this day. The volatility is very supportive to us. Prices are not entering inside the zone. They are just closing near the zone. And tomorrow what happens? Morning hour volatility will be high. So prices are entering into the zone and the existing pending orders are pushing, and that way we are getting good profits every time. The reason is not only because of high liquidity zones. The reason is also because of the volatility just before the zone. Prices are closing near the zone, not entering. Closing near the zone in today's report means tomorrow probably those zones are going to give a good success. That way I build the algorithm. That's why every time stocks near the zones are always giving good profit. If you take previous day's reports and monitoring those stocks, few stocks only we are getting success. Because the volatility conditions are changed. If you take Thursday's report or if you take Wednesday reports, and if you want to monitor them today, you can't expect as much as the success you get on last Friday's, comparing with the last Friday's stocks. The main reason is because of changes in the volatility. So that point, previously also once I told about this point. I don't know how many of you are in a position to understand what I am trying to explain. But at least you can remember, stocks near demand and supply zones are very powerful because of certain rules I consider in my software algorithm. So in this stock already prices are entered into this zone and almost they closed at the zone. So I may not be in a position to give much importance to this zone in tomorrow's trading. I'm not saying it is going to fail. It may work. Who knows? It may work. The chances are 50-50. When 50-50 chances are there, mostly I don't look into those stocks. I will keep in the watch list. I will monitor what is happening tomorrow. But I don't plan for the trade in this particular stock. Next time again prices go up, and again next time again algorithm identifies the stock near the zone. At the time again I will give importance because the prices are closed just about to reach. At the time I will consider these as rejections and I will give priority to this zone, but not immediately. There should be a move from here, up move, and then again it should come back. Then only I will consider this move is a good move. Then only I consider there are good number of pending orders in this area, but not immediately tomorrow. Because sometimes what happens, you may take Thursday stocks and Wednesday stocks, and you will try to look for the trades. They may fail. So I don't want you people to do like that. Always look into your previous report only. If you want to go one more day back, maximum you go one more extra day. But doesn't go for the last 1 week back or 2 weeks back reports. But you can monitor them when those high liquidity zones are fresh zones, then you can monitor them. There is nothing wrong. Okay, this is about JSW Steel. Hope some learning you have when you have to reject high liquidity zones. Hope you understand from this. For that, first you need to understand what exactly the volatility. Because volatility is one complicated concept. If you can able to understand the volatility concept, most of the time your decisions will be successful decisions. Next, Page Industries, we didn't get the trade today. This is also a stock from our 75 minutes time frame list. And Dabur is also a 75 minutes zone, high liquidity zone, but it is a supply zone. So today, prices just entered into this supply zone, but they didn't go to the fine-tuned area inside. But it has given some rejection, but this is not sufficient enough. If it would have gone inside here, we have the actual institutional pending orders are there. The fine-tuned area is having the real orders. And the next one is IPCL Lab. This one has given a very good return. You know, IPCL Lab is given 19,500 rupees return, which is 8.22% return on the investment. But this is not a valid trade. Of course, our high liquidity zone worked, but to consider the trade, there are some fundamental rules we will follow. Lower time frame, the structure should be very perfect, the structure of the zone. That is one thing we look. Today, see one trade we rejected, Asian Paints, because of sluggish leg out candle. That way, what is the reason behind rejecting this? The reason is RR. RR is not at all good. It's very poor. Not even 1:1 ratio. Not even 1:1 ratio. Less than 1:1 ratio. And not in a position to fine tune this. Not in a position to fine tune because of this large leg out candle. The high of the leg out should be our distal line. See the risk how much. Even after I fine tuned, only a small portion is only reduced. But the supply is very strong in this zone. Some price action clues are telling us the supply is very strong. Even then we are not in a position. Why? Because what happens in case if our trade fails? Probably we would have got 18,000 rupees loss also we would have got if it. See, the return is it has given less than 1:1 risk. It is this trade is having. Today it has given 19,500 rupees profit because it is successful. If it is failed, we would have got more than 20,000 rupees profit. Sorry, we would have got more than 20,000 rupees loss in case if it is failed. Because it didn't fail, the numbers, we are able to see the numbers. Okay, why we are seeing the numbers? Because to check the performance of our high liquidity zones. Every high liquidity zone performance may not be a trade for us. But whether they are supporting or not supporting, they are giving some returns. But you cannot take the return just like that if there is no sufficient risk reward. That is the fundamental rule we have to remember in supply demand zone price action. Without risk reward, we cannot trade. Most of the people, they fail in stock market because their discipline regarding the risk reward is not perfect. So I don't want you people to follow blindly take the trades. Okay, high liquidity zones are working, I agree. Failures so far we have seen only two in last 2 months. That is also I agree. We have more than 50 trades, successful trades during the last 2 months. That is also I will agree. But still, it doesn't mean you have to ignore risk reward concepts. Or if it is having sluggish candle, you have to ignore that. You have to follow all supply demand zone basic principles you have to follow. Few deviations only you will take. Few deviations you will take. Something related to risk reward, something related to location, that is curve. You may take some deviations, but not the basic level concepts of supply demand zone we should not ignore. You never know what happens in stock market. The day could be a bad day. If you are thinking that anyway this zone will not fail and if you take your trade, if it stopped out, we would have got 20,000 rupees loss. What is the maximum risk we are planning? Between 2,000 to 3,500 maximum. That stock at least it should give you a minimum 9,000 to 10,000 rupees profit. At the time only we are taking a little extra risk when the reward is good. But otherwise, do not accept such kind of trades. Today it looks like the money is excellent money, 18,000, 19,500 rupees, which is close to 20,000 rupees. There is an entry buffer here at the blue color line because always it is giving you huge rejections from this area. Same thing happened. This was the first rejection. This is the second rejection. After that, it reached the target. But even though the zone has given a good profit, but it is not an acceptable trade. This is one point you have to remember. We rejected it because there is no good risk reward. So, next one is a successful trade from our Thursday's list. So far we have completed all the stocks from our last Fridays. Last Friday is the latest one. Thursday, actually I kept few stocks in my watch list because of few reasons, strong reasons. This one is Dr. Reddy Lab. So this is a daily high liquidity zone. Dr. Reddy, no. This is not daily high liquidity. Yes, sorry. This is a daily high liquidity zone. We have fine-tuned to 5 minutes level zone, which is a high liquidity zone. This 5 minutes is a high liquidity zone. So already this daily zone is we have a rally based drop. In this rally based drop, inside we found 5 minutes again high liquidity zone. Daily is high liquidity, inside again 5 minutes is high liquidity. And this 5 minutes is holding the prices. Why it is holding? This is a very important lesson I will explain. Please concentrate. In our entire today's video, this particular topic is a very excellent topic. You please concentrate. So before I get into the 5 minutes, first let us look into the 75 minutes. We have a 75 minute zone here. Actually, you have to draw from here 75 minutes. Why I have gone more deep is just to minimize the risk point of view. Otherwise, these 4 candles you have to consider. The reason why I have reduced the 75-minute zone is because already prices went a deep inside. And just before this, I identified a 5 minutes zone. This is the 5-minute zone. So let's go to the 5-minute zone. So here we have a rally candle, we have base candles, and then we have a drop candle. After that, see the price. There are a lot of rejections are coming. You may think there is a sluggish movement here. Prices stayed only 2 candles. That's why I'm ignoring. I'm not considering this is sluggish because after that it came down below this candle. Prices came below this candle. They didn't stay completely here inside this. 1 or 2 candles or maximum 3 candles, you can give excuse. If they come out of that sluggish nature, you cannot consider that as a sluggish. This move I will consider a candle without follow through. But see the rejections here. Not only the rejections, the point I want you to observe, within the 5 minutes, again new 5-minute zones keep on creating. So you have a rally candle, you have 4 base candles, again you have a drop candle. Again you have ERC candle, this is a ERC candle, legging candle. So again you have a base candle, you have a drop candle. And because this is looking like a rally candle, you draw your zone from here, from high of this candle till, because among these 3 type of candles, whichever is having high, that you will be selecting your digital line. So inside this, keep on creating. But always you keep the stop loss as the main zone's digital line. Even though new zones are keep on creating, it is a LOTL concept. Within this zone, new zones are creating, level on the top of the level. And moreover, this is a high liquidity. Because it is a high liquidity zone, there are new zones keep on creating inside this. Generally, lower time frames, new zones will be created. But sometimes because this 5 minutes, 15 minutes, they itself are the lower time frames. So within the same time frame itself, you can find a new zones inside that. Again, another test. Now also again one more zone is created. Again you have a rally candle, you have a base candle, again you have a drop, big candle here. The ERC candle, expanded range as a drop. See how a new zones are getting created inside this main 5-minute zone. And today again prices, because already new zones are there, when today price entered into this, definitely we can expect a successful trade. So that is what happened today. Just entered into this because already a new zone is created inside this. And moreover, risk is a acceptable small risk here. And we have sufficient RR. So you can take the trade. So when we got the entry at the 9:20 minutes candle, 5 minutes candle, we got the entry and reached the target at 10 o'clock, 5 minutes candle. In less than 1 hour, our trade is finished. Dr. Reddy trade. You know how much profit it has given? 8,518 rupees profit. And which is 6.839% return on the investment. That means close to 7% or 6.9% close to. So this is an excellent trade. This is based on the 5 minutes. This is not 15 minutes reward, this is 5 minutes only. Because this is a high liquidity 5 minutes, so pure intraday trade, this one. This is not a short term trade. Short term means mostly our target is 15 minutes. Because the high liquidity is 5 minutes, you cannot expect beyond 5 minutes target. If we want to check where is 15 minutes, let us verify. Is there any 15 minutes area here? We have 15 minutes here. Drop, base, rally. It's very far away. You have to make sure your target is around 6 to 7% level during the intraday for high liquidity zones. Actually, this is a perfect trade for high liquidity point of view. And the next one is Zydus Life Sciences. This is from the previous weeks. And remaining whatever I am monitoring, they didn't prices. There is one more in my watch list, India Cement, from the last Thursday, not last Friday, last Thursday stocks. Remaining stocks are last Thursday stocks only. The reason why I kept in my watch list, it is a fresh zone and already fine tuned. So I'm just trying to observe what is going to happen. Prices are unable to go inside this zone. So this is the one. Zydus Life Science is one successful trade. Previously, oh sorry, not previously. Today it gave two entries. So one is at 920 candle and another one is at 925 candle. Again, if you miss if any of these candles, again one more entry it has given around between 11 o'clock and 11:35. So almost half an hour period prices are within this. See, after that, how sharply the prices came down. That means the entire demand is consumed within this area. Today, demand is very strong for this particular stock. So consumed, all these pending orders consumed. That's why it took some time. After that, see how it pushed the price. And where prices went, obviously, as usual, our 15 minutes demand zone. We have a 15 minutes, we have a rally candle, and then we have continuously 4 base candles, and then prices went up with a gap. That is a strong leg out. And finally, prices reached into this zone at 12:30 candle. At 12:30, 15 minutes candle. And the profit it has given is 7,425 rupees, which is 7.288% return on the investment. The ROI is 7.288%. That means the cost of this particular lot is not very high. That's why we got good return on the investment. And the last one is Lupin. Lupin already we got a success on last Friday. Last Friday we got a successful trade. And again today second opportunity we got. This is the stock listed on Thursday's report. Why I kept this particular stock in my watch list is even though it is tested earlier, because there is a scope for the deep entry. And Lupin is not from a daily high liquidity. It is from 75 minutes high liquidity zone. And last Friday, the first test. Thus, we got the first test for 75 minutes. Last Friday. Where we took at 15 minutes time frame. We have taken last Friday. We didn't fine tune deep. Last Friday, what we did? This was our trade plan during the last Friday. So we got the trade. And today what we did, because the last Friday already prices are reached, now there is a scope that prices may go a little deep. So that's why I took a deep entry. That is type 2. What is type 2? For a supply zone, proximal, type 2 proximal line. That is lowest value of the base candles. Lowest body, lowest body of the base candles. See today, the risk is even minimized and prices went a little deep, then came down. See how they came into this. You may ask a question, is it possible again one more trade? Yes, there is a possibility, because today again it is created a new zone. See here, we have a rally candle and we have two base candles, we have a drop candle. Still we will keep the stop loss for the main, already explained in the previous trade. We never change our digital line. High liquidity zone, what happens within the same zone, again and again new zones will be created. Already this is a 75-minute zone. We are keeping the digital line as it is. Now again we can take a trade, but this time what happens? You may take an entry a little here itself. This is the way you plan next time. Or you further reduce by going a little deep. This is the way you can plan. Somewhere here or maybe a little inside, the prices will go again, they come back. That possibility is there. But you have another opportunity for looping. Because today the prices went deep, it doesn't mean we lost the opportunity. If the supply zone is not created, a new supply zone is not created, then definitely we won't take trade next time in this looping. And if you have a good risk reward, remember, taking trade is possible only when we have a good risk reward. See today what happened for Asian Paints, the risk reward is good, but the percentage ROA is not good today. So that's why the trade is okay, no issue with the trade. But what is the next one we didn't take? IPCL Lab. IPCL Lab, it has given excellent profit, close to 20,000 rupees profit. But still we didn't take the trade because there is no RR. So Asian Paints we did not reject, not because of RR. We got a good RR. We have minimized the risk even though the overall profit margin is less, we have a good RR for Asian Paints. But we rejected because of sluggish leg out candle. But IPCL Lab, we have a good profit possibility is there, but RR is not at all good. Not even 1:1. Less than 1:1. That's why we rejected IPCL Lab. Exactly the same way, if you have a good risk reward, next time, again, maybe Lupin may give one more successful trade. That possibility is there. But remember, all these possibilities again based on the volatility conditions. If the price go down, next time when they come near to this zone, at the time you take. So this is about the trades from our previous list. Almost 7 stocks today entered and they gave profits. But couple of stocks we did not accept for our trades, and remaining all are good stocks. And they gave a very good profit today. So now let us generate demand and supply zones. So entry time frame is daily. Let us find the stocks near to the daily demand zone. So 5 stocks are near to the daily demand zone. And none of these stocks demand zones are having high liquidity. So let's go back. Entry time frame is daily. Let us find the stocks which are near to the daily supply zone. So 3 stocks are near to the daily supply zone. In that, we have 2 high liquidity zones. One is again Apollo Tire. Previously once we got this. And next one is Indus Tower. Indus Tower also previously we took trades. If I am not wrong, around 2 or 3 trades we took on Indus Tower. And it is already tested 5 times, Indus Towers. Remember, always remember, if it is a tested zone, you have to find a new fresh zones or you have to go deep inside. You have to minimize the risk deep inside and then you have to take the trade. These are the only 2 possibilities you have to follow. Moreover, they are daily high liquidity zones. The risk is very, very high. You have to fine tune properly. So let me go back. And let us generate the bullish and bearish setup related on daily time frame. Probably these reports you won't get tomorrow and day after tomorrow. I will be posting only stocks near demand and supply zones only in the Telegram group. Entry time frame is daily. Let me start a new, Entry time frame is daily. Because it is bullish setup, entry zone is demand zone. For daily time frame, what is the monthly trend for bullish setup? The monthly trend should be either uptrend or sideways. Weekly trend should be uptrend. And the daily trend can be anything. And what about the price direction? For monthly price direction, because it is a bullish, it should travel from demand zone to supply zone or demand zone to all-time high. So first we will generate demand zone to supply zone related reports. And weekly also demand zone to supply zone. And we don't want pierced zones. So for daily, because it is a daily zone, so for daily time frame, pierced count you have to set 0, 0. So, and it will filter only the demand zones. Based on the demand zone only. It won't care about supply zones because our entry zone is demand zone. Now let us filter. So these 4 are bullish setup related stocks. But we have one more condition. So let's go back. What is that? The price direction on monthly time frame could be this time demand zone to all-time high. Because some of the monthly zones may not be having any supply zones. So these demand zones are all-time high demand zones. Equally, again, 2 conditions are there. Monthly there is no supply zone, but weekly there could be supply zones. And weekly also there may not be supply zones. That's why we have to generate 2 more reports. So that's why the second report is a demand zone to supply zone condition. Let us filter. So total 11 stocks are filtered. All these are all bullish setup related stocks. Look into the search strategy, you will get clarity. Entry zone, demand zone. The ZV trend means zone violation trend. Monthly is up or sideways. Weekly is up. Based on these conditions, we identified this is bullish setup. And one more condition is in bullish setup, always prices should be traveling from monthly demand zone to monthly supply zone. And also weekly demand zone to weekly supply zone. If there is no monthly demand zone or weekly demand zone, then the demand zone to all-time high they should travel. These conditions only bullish setup. And we are avoiding pierced zones by setting pierced count 0 for demand zones. So none of these demand zones you will not see any pierced count as more than 0. All are zeros only. Supply zones might be pierced. So this is our second report, and the third report we will generate for bullish setup. So this time the condition is which condition? Price direction. The price direction monthly is anyhow demand zone to all-time high, but weekly this time the stocks weekly stocks having only all-time high demand zones. So that's why demand zone to all-time high. For this condition, let us generate. So there are good number of zones. All these are all-time high zones for monthly and weekly, and some of these stocks are having even daily also all-time high zones. If you are seeing any dark color, green color, they are all-time high demand zones. But anyway, monthly and weekly, they don't have any supply zones for all these stocks. But daily, few stocks are having supply zones, and remaining all are all-time high daily demand zones. So total 40 stocks are there from this list. All these are all supporting bullish trade setup. Now let us look into bearish trade setup for daily time frame. So entry time frame is daily, entry zone is supply zone, and the trend for monthly should be either sideways or downtrend. Weekly should be downtrend because this is bearish setup, and price direction monthly should travel from supply zone to demand zone. Weekly also should travel from supply zone to demand zone, and we don't want pierced zones. So pierced count for daily time frame we are setting 0, 0 because we are filtering our report, we are filtering the daily zones. Now let us generate. So we have only two stocks. Bearish setup related stocks, we have two stocks. But we have one more condition. What is that? Monthlies are traveling from all-time high to demand zones. Let us find. And weekly also, assume let us supply zones are available in this condition. No stocks are available. Let us assume weekly also they are from all-time high to demand zone. Now also not available. So we have only two bearish setup related stocks we identified for daily time frame. Now let us generate demand and supply zones for 75 minutes time frame. So entry time frame is 75 minutes. Let us find the stocks which are near to the 75 minutes demand zone. So these are the three stocks near to the 75 minutes demand zone. So we have couple of high liquidity zones. One is Nifty Private Bank, that is the index. Glenmark is the other one, which is already tested once. And this is high on the curve. Okay, let's go back. For entry time frame 75 minutes, let us find the stocks which are near to the 75 minute supply zone. So we have seven stocks filtered. And here few high liquidity zones are there about India. Already tested because it is having one rejection. It means lower time frames we can see the test. So only one high liquidity zone from this list. So this is about stocks near demand and supply zones for 75 minutes. Now we will generate a bullish and bearish setup related reports. So entry time frame is 75 minutes. Entry zone is demand zone. That means bullish setup stocks we are filtering. Okay, now what is the for 75 minutes? What is the higher time frame? Weekly. So weekly trend should be either uptrend or sideways. And ITF is daily. It should be uptrend because it is a bullish setup. And the price direction weekly should travel from demand zone to supply zone. Daily also should travel from demand zone to supply zone. And the pierced count should be 0, 0. Which time frame this time? For 75 minutes we have to set. P/S count 0 and 0. So let us generate the report. So 4 stocks, these 4 stocks are having, they are bullish setup related stocks. We have 2 high liquidity zones, which are fresh zones. So let's go back. Let us select the next condition for bullish setup. What is the next condition? This time the weekly prices are moving from demand zone to all-time high. But daily supply zones are there, demand zone to supply zones. Let us generate. So no stocks. So there are no supply zones. Now let us select a demand zone to all-time high, daily time frame. So we have a big list. All these are all supporting bullish trade setup. So total 35 stocks. So this is about a bullish trade setup. Now let us generate a bearish trade setup for 75 minutes. So entry time frame is 75 minutes. Because it is bearish setup, you should select supply zone. And the trend, weekly trend should be for bearish setup. It is either downtrend or sideways. And daily should be downtrend. And P/S count is already we said 0, 0. So no stocks are available for bearish setup. Let us check the strikes. Is it correct? ZV zone violation trend for weekly is either down or sideways, perfect. And daily should be down, perfect. The direction weekly is a demand zone to all-time high, okay. And the daily demand zone to all-time high. Daily should be demand zone to supply zone. This is the third condition. Actually, we executed the third condition. Okay, now we will execute the second condition. This is also not having any stocks. Okay, fine. That means we have identified only one report. Remaining 2 reports, so there are no stocks. So this is for a bearish setup. I think something wrong here. Bearish setup, the first report is prices should travel from supply zone to demand zone. Daily also supply zone to demand zone. This is the first report, supposed to be. Oh, sorry. Previously we generated demand zone to supply. So this is supply zone to demand zone. So 9 stocks are filtered. So please ignore the previous report for bearish setup. So this is the first report within the bearish setup. Now second report we will generate for total 3 reports we are generating for every setup, bullish and bearish. So this time prices should travel from all-time high to supply zone, ATH to supply zone. Oh sorry, ATH to demand zone. So we selected ATH to demand zone, but daily supply zone to demand zone. No stocks are available. Now daily also ATH to demand zone. Mostly you won't get stocks, yes. So we have only one report, we got the stocks. This is for 75 minutes, a bearish setup. Now let us move on to 15 minutes time frame. So let us generate reports for 15 minutes time frame. Entry time frame is 15 minutes. Let us find the stocks which are near to the demand zone. Near any demand zone. So these three stocks are near 15 minutes demand zone. We have few high liquidity zones, only one. Already gave 3 tests and 5 rejections. Excellent. EDL. Okay, let's go back. Entry time frame is 15 minutes. Let us find the stocks which are near to the 15-minute supply zone. So total 6 stocks are filtered. These 6 stocks are near to the 15-minute supply zone. Oh God, Cipla 15 tests, but it is already pierced 5 times. Okay. So this is about stocks near demand and supply zones for 15 minutes. Now we will generate bullish and bearish setup for 15 minutes. So entry time frame is 15 minutes. Because bullish setup, let us select demand zone. And because it is 15 minutes setup, what is HTF time frame? Daily. So daily it should be either uptrend or sideways. And what is ITF? 75 minutes. 75 minutes should be uptrend. And what about the price direction? And daily, prices should travel from demand zone to supply zone because it is a bullish setup. And 75 minutes also demand zone to supply zone for our first report. And the pierced count we have to set for 15 minutes time frame. So for pierced 0, 0, pierced count 0 and 0. So let us generate. So we have 5 stocks. These are all supporting bullish trade setup. And we have 2 more reports we have to generate for bullish setup. What is the second one? Now the daily is moving from demand zone to all-time high, but 75 minutes still moving from demand zone to supply zones. So we are looking for 75 minute supply zones are available. Yes, 4 stocks are having 75 minute supply zones. So all these stocks are as per bullish trade setup. Next, third report for bullish trade setup. What is the third report? 75 minutes also they are traveling from demand zone to all-time high. So 20 stocks are filtered now. These 20 stocks are not having daily supply zones and 75 minute supply zones. 15 minute supply zones, few stocks are having, even few stocks are not having 15 minute supply zones also. So this is the list of 15 minute stocks supporting bullish trade setup. Now let us look into bearish trade setup. So let's go back. Entry time frame is 15 minutes. Entry zone should be supply zone because it is a bearish trade setup. Now we have to change the trend. Daily trend should be either a downtrend or sideways. 75 minutes trend should be a downtrend. And price direction, because this is a bearish setup, prices should travel from supply zone to demand zone. 75 minutes also supply zone to demand zone. We set up the pierced count 0. So total 6 stocks are filtered. These are all bearish setup 15 minute stocks. 15 minute supply zones. So let's go back. Let us generate one more report. What is one more? Now this time daily are traveling, prices are traveling from all-time high to demand zone. But 75 minutes first condition is supply zone to demand. Let us assume supply zones are available. So one stock is available. So this stock is not having a daily supply zone, but 75 minute supply zone is there. But now prices are traveling from all-time high to daily supply zone. So such kind of stock it is. But this zone is already, sorry, this is a supply, bearish setup. So pierced counts for supply zone is 0. Daily is pierced, we don't bother about that. Because this is a high liquidity zone. Maybe you can look for one more test. Okay, let's go back. Let us generate the third report for bearish setup. What is the third report? Even 75 minutes also traveling from all-time high to demand zone. Any such kind of stocks will be filtered. So no stocks are available. So this is about bullish and bearish setups for all the time frames. That is daily, 75 minutes and 15 minutes. And finally, before closing, we will generate demand and supply zones for all the stocks for daily time frame. So let us generate demand and supply zones for all the stocks for daily time frame. Entry time frame is daily. So this is the complete list of the stocks. I will keep on scrolling this list down. Whichever the stock you want to refer, there you please pause the video and then you can study the parameters. So this is the complete list of the stocks. I hope this information is useful to you for your further study and analysis. So let us all meet again in our video on Thursday or Friday. The next 2 days I will be submitting the reports, stocks near demand and supply zone reports only at our Telegram channel. But I don't know what time I will be available, but whatever the time I am available, there I will post in the Telegram. Hope you all will get your message notification. So thank you all. Have a good day.